Welcome to our monthly School Improvement Partnership podcast, What Charter School Leadership Looks Like. I'm Alan Wohlstetter, founder and president of School Improvement Partnership, which focuses on data transparency in the charter school sector. We report on over $2 billion of charter school bonds for the financial markets and accurately track the operating, academic, and financial data for every charter school and CMO in 33 states in the District of Columbia. Uh, School Improvement Partnership has a database which is the most comprehensive charter school data set, with more being added all the time. Uh, we produce on a monthly basis a podcast with leaders in the charter school sector to get their perspective on the charter school landscape. And our guest today, which I'm thrilled to introduce, is Yaffa joined Hilltop in 2021. She works collaboratively with banking teams and diverse investor groups to create unique capital funding solutions that enhance the security structure to maximize investor and issuer outcomes. Prior to Hilltop, Rattner spent 13 years as a managing director and head of municipal credit at Piper Sandler. And before that, 12 years at Moody's, I think, where I met you. Um, and in 2025, Ratner, really, Yaffa was elected to Smith's Research and Gradings Municipal Analyst All-Star Team for the ninth consecutive year, which, we have no Phillies that have been on the All-Star Team 9 straight years, but we now have Yaffa. So Yaffa, thank you for joining us.
Well, thank you for having us, and I hope this conversation could live up to that amazing introduction.
Well, I remember just for me, it's exciting to have you on because I think it may have been my very first national charter school conference where I didn't really know much about anything. And so I was going to the speakers. They had in those days they would have really great speakers and good topics, and everybody would flood to the speakers. So this one room was huge, and I was one of the last people who got in, and it was you speaking on charter school ratings. And in those days, everybody was still worried that charters only last 5 years, but the bonds were 30 years. How does that work? And you had figured that out and a lot more. So it's amazing how far the sector has come.
Yeah, that is certainly true. I think that was frankly back in the late 1990s and early 2000s. So for sure, it's been a journey for us all.
Well, Yaffa, you recently published for Hilltop Securities, you put together with your team their charter school market update. And I'd love it if you could take us through that and maybe start with what you see about bond volume over the last couple of years and, what you see going forward.
Sure, I'd be happy to do that. So I think that there are several key themes that I'd like to talk about today. The first one is just the overall broad market acceptance of charter schools. As you can see from that slide, issuance volume increased by about 45% between 23 and 24 and remained relatively stable in 25. Our expectation for 2026 is very similar to that. And the reason for that is we've seen this enormous growth, 15% total growth in the last 6 years in charter school enrollment. And as a result, we need facilities, adequate facilities at a minimum to educate the children. And so the fact that we've seen this very significant growth is not a surprise. The expectation that the growth or the new level, the $4.5 billion of annual charter school debt is going to be the new normal, not a surprise at all. Um, Another trend that we're seeing in the charter school space with respect to debt issuance is really heavy state concentration. 4 states, Texas, Florida, Arizona, and New York, account for 60% of charter school issuance. And we're also seeing some pressure to really, and we'll talk a little bit about this in a few minutes, but reduce the funding disparity between charter schools. And we're seeing some states, including Texas and Florida and others, that are really coming forward with new ideas to really generate some more revenues, whether it's capital funding or per pupil funding for their charter students. The final item with respect to market trends that we've noticed is really an increasing trend that started basically in 2025, and we're seeing it now further gain some momentum into 2026. We're seeing some more defaults in the charter school space, and we can each explore different ideas why that could be happening. But we do know that they are happening, and it is a reflection of, even though there's very significant maturation in the industry, from a financing perspective, there is some risk there as well. And the last element that I'd like to point out on this particular slide is just the amount of investment grade debt versus non-investment grade debt. And this is really remarkable. 60% of charter school issuance last year was investment grade, with 40% either non-investment grade or non-rated. And Alan, when you and I started in this industry, the amount of investment grade debt that was issued was in single digits. So really, really an impressive evolution and maturation in the space. And I look forward to going to the next slide so we can talk a little
Before
bit
you
more.
just could I just drill down on that one
Sure.
point that you make, which is such a good one? On that, it seems that there's a growing number of states that are providing credit enhancement for charter schools.
Hmm.
Texas, Utah, Colorado,
Hmm.
Arizona, and Idaho.
Hmm.
Do you think that's a factor in the increase in investment grade credits?
Maybe to a certain degree. And let me explain that a little bit better. You have to look at each of the state enhancement programs on its own, because some of the states require that the charter school themselves be investment grade before they'll assign their enhancement program on top of this. And this is specifically the case in Texas and Colorado, where you need to be investment grade in order to benefit from the enhancement program. It's not true in Utah. You only need to be a double B. And in Idaho, there is no explicit rating required, but they do look for financial health. So the answer is maybe, Alan, but not definitively, because as I mentioned earlier, some of them already are investment grade to get the wrap. It's certainly accretive to the overall array of ratings in the charter school space. And finally, I do think that the most important elements to get charters to investment grade outcomes are uh, academics, financials, governance, and finally demographics.
Yeah. Oh, no, there's no argument about that. I agree. So in that chart on pages, and we'll come back to your next page now, you're saying that embedded in the large investment grade number, you almost are saying that in Texas, a lot of those schools would have been investment grade anyway without the state guarantee. And that's not really quite the way it's marked out. So I understand.
Yeah, and in fact, what these charts, and these are rating agency numbers, these charts are without the state enhancement. And so how do I know that to be true is because, for example, the Texas program is a AAA rated program, Colorado AA. So this program, these charts are only looking at the underlying rating. So you could see here, Alan, that the highest rating on this chart, right, is basically triple B and above, but it's a very, very small box, which means that we're really not recognizing the charter schools that have the benefit of the enhancement
Very, very
in, in,
smart.
in this in this distribution.
Thank you.
Okay. What's interesting on this chart, in addition to the distribution, so the median rating for charter schools is triple B level for each. And you could see an array of charter schools in the double B space as well. The rating agencies have about 15% of their ratings in negative outlook, meaning that it's some of those items that we talked about before, financial elements, governance, demographics, or academics are pressuring the schools, and therefore there's a negative outlook on about, for Moody's, it's about 15%. I'd say for S&P, it's closer to 10% on individual credits. But what you could see from the graphic above is that both Moody's and S&P have a stable outlook on charter schools. These outlooks were both assigned in December of 2025 to take us through calendar year 2026. And the concept is that generally speaking, growing enrollment, growing aid for charter schools and acceptance for charter schools should result in some financial stability for the charter schools. And that's what this slide is showing you, because at the end of the day, you are seeing about 80% of the outlooks from the charter schools, both S&P and Moody's, are in fact stable. And that's evidenced by that bar chart on the lower right-hand corner that you could see in the dark blue, all of those stable outlooks from both of the agencies. Excellent. So along comes Hilltop, and in January of this year, we released an outlook, and we said, you know what, we don't believe that the outlook should be stable across the board. While we do believe that charter schools have absolutely benefited from year-over-year consecutive growth, in children and in acceptance. And we absolutely believe that many boards have increased their governance and overall accountability. But we also recognize that the demographics in each of these states is not the same. And for example, what we did here is we show the top key states, as we mentioned earlier. These 5 states account for 60% of the charter school debt. And now we're showing enrollment share, right? So Texas, it's high, Florida high, California high, New York a little bit more moderate, Arizona high. And then we show the percentage of issuance share and then what's going on in the population. And I point out to you that Cal and New York have declining population, and Arizona, and that's declining school age population as well as declining total population. Arizona has increasing total population, but declining school age population. So what we are suggesting is you need, from an investment perspective or even a governance perspective, depending upon the seat in which you're sitting, to have really provincial glasses that really takes a look at the demographics of the locality in which the school is operating to get a better sense as to what the financial impact may be. And so to drill this a little bit more deeply, Texas and Florida, you have growing enrollment, you have growing amount of revenues available for charter schools, and we would expect as a result, the operating environment for those schools will be a little bit more conducive. Conversely, in California and New York, where you actually have lower enrollment, you may have a tighter environment where the state governments will need to ultimately fund the charter schools to find the space for the necessary per pupil increases that are required year over year to fund incremental expenses.
Yeah, no. So it's really a state by state basis you're thinking is going to be important to understand.
That's exactly right. Very well said.
Mm. And you were also positing that, as you look at a particular state, it looked like you were focusing on the state's fiscal situation as part of the backdrop for looking at what the future of charter school funding in that state may look like.
That's exactly right. Unlike traditional public schools, where the predominant portion of revenues is typically coming from property taxes, charter schools are really reliant upon the states for their funding, for their per pupil funding, and therefore it's critically important to take a look at what the state is dealing with on a funding policy basis to make sure that funding for charter schools is not getting crowded out when we're dealing with perhaps a growing demographic of people over 65 years old that might need different services and have different priorities. So it's just a question of taking a look at these concepts together to really get to a more refined version of a charter school outlook with respect to who may have a little bit more operating flexibility and who's likely to have a little bit less in fiscal 26 and 27.
Sure. So just the piece I want to make sure I understand on the funding. And again, my little glasses may just be too Pennsylvania focused. There, in here, it's actually for charter schools. The funding is identical in a public charter school and a public district school. The source of the revenue comes from the state and local property taxes. Just as you said, it's a combination. And the math for a public charter school is what the district spent last year per pupil. So it's a straight pass through. So it doesn't contradict in any way your point, which is if the state's cutting their budget, then that affects the money coming in, which is, I guess, what you're saying. But I just want to underline that in this state and in many states, the district, it's a different mix as to how much comes from real estate taxes and how much comes from the state. But it's the same amount for a district school and a charter school.
Not in all states, Alan. And so, for example, if you take a look at some of the issues that are going on in New York, for example, you'll see that New York City schools, traditional public schools, are expending significantly more per student versus the New York City charter schools in terms of what they're spending, and their academic outcomes are very, very different. So it really is state specific. Pennsylvania, has one way of financing charter schools, but many other states are not similarly equivalent. So, we do need to be cognizant of that. And as a result, what tends to happen, like for example, in Florida, Florida is in the process of this year increasing capital outlay funding to 248 million, up from 230 million last year. And that's just, on charter schools. So that's in recognition of the fact that the funding formula in Florida is just not the same as it is for perhaps what you've mentioned in Pennsylvania.
No, that makes a lot of sense. And do you see in states like Florida where there is growing demand, unless I'm missing it, for charter schools, waiting lists and all that.
Mhm.
Does that sometimes, in states where there is a high percentage of those students, do you see pressure increasing on
Sure.
governors and legislators to sort of close that funding gap to more equitably fund charter schools?
Sure, and we've seen that in Texas as well as, population in charter schools continue to increase. There's more pressure at the state level to add more funding available for facilities, and that's absolutely been happening, and that's credit positive for Texas charter schools. But as a general rule, it's incremental, right? You have the political pressure, but you also have some of the philosophical and policy pressure that you already know that you have to fund X, Y, and Z. So it tends not to be, unfortunately, here's the issue, here's the solution, and it's done in
Yes.
1 year. It tends to be a multi-year process. It's incremental. I would say, generally speaking, it's evolutionary, not revolutionary.
Ooh, I love that. And I mean, not to be too much of a homer, but in Pennsylvania, just to prove your point, in years of, the budget is not growing every year incrementally, but last year, $193 million more went to public education. Uh, and that increase it wasn't financial fiscal stability, it was, as you're talking about, at that point, the legislature is now under a consent order, the state is, to equitably fund, public education so that whether it's politics or whatever, it becomes a priority sometimes when it's hard to get a consensus in the legislature.
Sure. And the concept of litigation around equitable funding, I mean, has been around for decades. And we've seen funding formulas really change drastically in various different states, literally in the 30 years in which I've been looking at credit. So I would say that this is just going to be a trend that's going to continue for the foreseeable future.
Great. Well, I interrupted with all these questions, the slide in your PowerPoint. So let me go back to that because I want to make sure we focus on all of these points.
Yeah, I think the important takeaway here is that on average, right, we're seeing slight growth in general US population. And if you look to 2023 and beyond, the total US population is expected to continue to increase, just under 1% a year, basically through 2030. Conversely, the children or the cohort of K-12 from 2023 to 2030 is expected to decline. So it brings back to that original question of, wow, we've got fewer children to educate. Maybe that's a good thing because we already have all of the facilities to provide that education. And my answer to you is the population shifts are such that you have, on average, you might be relatively stable to a slight decline, but the reality is in some states you're increasing by several percent a year, while in other states you are decreasing by several percent a year. So in fact, in some states you will have overcapacity, right? And you may have the need to actually close some traditional public schools, where in other states you will be basically bursting at the seams and supporting the need, as we talked about earlier, for additional capital investment in the space. And there you have the data on a more granular basis. So as you saw on the earlier page, basically generally about a 0.5% growth annually in general population. But now you could see that states like California, New York, and Michigan have 5% or greater expectations of K-12 population declines. So again, this really underscores some of our thoughts with respect to the need to really focus on what is the population demographic in a particular state, what has happened and what is expected to happen, and then overall taking a look at the funding flexibility in each particular state. What we can tell you is, on average, the states don't have a lot of room for expense growth in 2026. So according to the National Association of State Business Officers, the median general fund expense growth rate in 2026 is 0.2%. If you think about the cost of teachers or electricity or insurance, it's a lot bigger than 0.2%. So, this is a concern if my total revenues allocated would only be crowded into that particular increment. So this is the very source of our focus area and why we are really talking with investors as well as issuers, meaning charter schools, to really focus on some of these concepts, because these concepts will absolutely inform the ability of charter schools to successfully access the markets in 2026 and beyond.
Yeah, and the way you said it was beautiful. It is sort of the background for these analyses that oftentimes are, it's going to be school specific and and now we're getting to some of the other, what I would call data points that, you are familiar with, people in the sector are familiar with that influence whether a charter school can be successful financially, academically, and otherwise. Just one little thing I was going to just curious about in terms of your experience. As we reported in Charter School Investor, which is our newsletter, which comes out every 2 weeks. The Trump administration increased in the fall annual funding for the federal charter school grant program by $60 million, bringing it to a record $500 million in 2025. Are, are you seeing any impact from this, like an increase in charter school startups or expansions of quality charter schools?
So, as general rule, a lot of that grant money is for startups, and as a result, just where we sit in the overall gestational life of a charter school, so we don't really see it. It's going to be more for the startups, and we generally will see the charter schools after they've opened their doors. So, we think it's a good thing. We need some new charter schools with specific missions and locations. So we're very, very supportive of it. But unfortunately, where we sit, where we generally have a couple of years of operations under the belts before they're ready to access the capital markets, um, we don't get to see too much of it in our day to day.
Right. Do you generally see charter schools once they've certainly opened and started to get students and maybe had a charter renewal, or sometimes even before that?
Oh, no, we'll certainly see that before that, Alan. There is from time to time the opportunity where a charter school is poised to open and knows it has the kids that are coming in, but hasn't quite opened the doors yet. We have seen a handful of these schools successful in the primary market. And generally, why they're successful is because their leaders have experience, they're recognized, they're serving a specific mission, and they could speak to that specifically. But generally speaking, the bread and butter of charter schools that are issuing in our market have probably 3+ years of experience. Certainly, there are those that have 20 years of experience, but they have some experience. They don't necessarily have to have been through the first charter renewal process, but they do have some operations under their belt.
Sure. Yeah. You mentioned early in our discussion, you'd, you keep an eye on charter school defaults just in your
Mhm.
work. And I want to hear a little about that and some of the, as we talk about factors that, contribute to that as you think about it.
Yeah, I think generally speaking, there are four broad categories that can inform us, that can be leading indicators of an impending pressure on a charter school. So let's think about it. Number one is academics. When we start seeing slippage in grades, we would expect, all other things being equal, that we're going to see a slippage in students, right? Parents are going to put their children into a charter school because they expect a good educational product.
Ah,
To the extent that there's no good educational product, they're going to look elsewhere. The dollars are going to follow the students. So the first step toward, there's a warning sign is academically they're slipping in their performance. The second sign that we'll see is the liquidity numbers are going to start to get pressured. So we often look at liquidity by days cash on hand. So how much cash is there relative to the size and scope of their operations? And if those numbers start declining, um, there's a concern there. It could possibly be that it declined for a good reason, right? You took some of your money and you paid for an expansion, but generally speaking, if there's a decline there, there's something that needs to be investigated. So that's issue number two. Issue number three is just overall turmoil at the board level. If all of a sudden we're reading that, there's a lot of turnover or resignation at the boards, there could be an issue there that would need to be further investigated because governance is critically important for our charter school success. And then finally is the issue that we've been talking about so much this afternoon, which is a question of demographics. If we know that we're in an area, a city, for example, that has declining demographics, people are moving out, potentially unemployment rates are high, so there's not a lot of people, not a lot of jobs for the families to um, have. there is an opportunity for that to be a leading indicator that that charter school may struggle, through no fault of its own. Even academically, it's okay, or liquidity, it's fine, and governance, it's fine. But, if the children are just not there, or there's too much competition in that particular area, again, that could lend itself to an iterative cycle. So, four key areas of focus that we would have, any one of them needs further investigation, but together can definitely inform an investor on a future charter school's health.
Interesting, as well as probably monitoring a credit. If you
Sure.
know when some of these leading indicators are happening. So that's why, as we talked about it, we thought, and at School Improvement Partnership, we thought it'd be important to be able to look at some of these leading indicators. If I could, I was just going to share my screen and show you for the School Improvement Partnership database, which maintains data on every charter school in 33 states in the District of Columbia. I wanted to show you something that we just added in the past year, some distress filters that actually point to a couple of those factors that are leading indicators for potentially a school that is having an issue. So, for example, if you let's just pick a state, we'll pick we can choose any of the 33 states. I'll just choose California. And what's interesting is we can click on let's say we want to see charter schools that are below 45 days cash on hand that are in the bond market. We search and boom, up comes the list of every school with less than 45 days cash on hand that's in the bond market. We can uh, we can export that if we want, if we clear that filter. But instead, we decided to do one on, this is another factor which can come from uh, decreasing academic growth will be a lessening of enrollment. Fewer students are going to be, families are going to say, I want my student to go there. In California, here is the list of charter schools that lost 5% or more of their academic growth in the past year, of their enrollment in the past year. So it's sort of a way short of the time when interest isn't being paid on a bond, when an investor can not only see when an issue may be arising, but also fairly figure out what that charter school bond is worth.
Yeah, I think that that's really great information that your team is putting together. I think it's going to be helpful for investors or traders or anybody working with charter schools, and it's very exciting to have that resource all in one location. I have a partner here at Hilltop who has worked with me for about 20 years, and he's on the investment banking side of the equation. So Bruce Sorensen. And he has a lot of experience in working with charter schools that are struggling. So I think an important takeaway from this conversation, Alan, ultimately is that there are resources for charter schools that are new, and that there are also resources for charter schools, even if they're struggling. And, being in front of issues, not putting our heads in the sand, is probably the best path of action to solve a problem, or, to solve an issue when there's just a little bit of smoke and not a billowing inferno.
Yeah, no, I think you're right, Yaffa. And I think, the importance of focusing on each state and each charter school separately is important. And, I think we would probably agree having increased data transparency in the sector and timely reporting makes it so that that's actually better for the sector because that helps address, an element of risk, which is if you don't know all the data, you can't possibly figure out how a school is doing. And so I think And then, people like Bruce Sorensen on your team, then can roll up their sleeves and whether it's a charter school that's expanding or one that expanded and is now trying to figure out how to make everything work. Everybody can have good data at their fingertips. And for the institutional investors, to be honest, it allows them to be able to um, value their bonds appropriately rather than what they paid for them 5 years ago.
Yeah, I think those are really true points, Alan.
Yeah. Well, I just really, Yaffa, wanted to thank you for being willing to walk us through your thoughtful analysis of the charter school sector. Sounds like while the future is bright in certain states, it might not be as bright in others that are growing as quickly. And I think for us to get more of a granular view from you as to what lies ahead is incredibly valuable for our listeners and for the market. So, yeah, but thank you very much.
Thank you so much. Have a wonderful day.